Welcome back to the channel. My name is Patrick, and in today's video I've got another live trade for you. So we are EURUSD. Yes, I do trade EURUSD often. It is very smooth, okay? The candle patterns, the prints, everything just makes sense to me. It's easy and clean to read, so I often trade EURUSD. It's probably the easiest pair for me to read out of the major pairs, okay? So that's GU, UJ, EURUSD, and USD Swiss. This is the easiest one for me to read, so I'm often looking at what's going on here, okay? So let's just zoom out. Let's start from the top. As you can see, price is now trending down. It got into our demand here. It did not hold. I am no longer looking for buys. I am bearish at this moment. Why? Because of what you may be able to just see underneath here. Okay, so we have a low here and across here, a low here. So this is the demand that failed, by the way, and we now created equal lows. I mean, it's clearly equal lows. Okay, I do not subscribe to equal lows as a support or resistance zone. I look at it as liquidity. Okay, I expect price to run it. When it does, I don't know when, but I expect it at some point to run it. Okay, so that is our target in terms of this trade, or that would be our preferred target. I'm scalping it, okay, and what I'm doing here is looking for a one-to-one. Okay, so let's just give a breakdown. So previous video we were sitting up here, I was on GU sitting up there, and I caught that move down. I did mention it in the video. I was looking at this move and I caught some of that move. I caught maybe 50 pips of that candle down, and then I scalped that, left the runner, then I closed it. Okay, so same thing happened here on EURUSD. Big drive down. Okay, yesterday I expected a reversal here to go and fill some of that. That did not happen because this was the Asian session lows here, and I expected it to reverse maybe here, but London session said no and push it down. So it's clearly bearish. It's not even interested in cleaning out some of its inefficiency. It pushed it all the way down and stopped right here. When it got to here, I had a look to see why it stopped there, what was going on there, did it just enter the demand zone or so on, and what I saw was the equal lows that it had created. So it created equal lows to end the day. So what do you think is going to happen today? So that's my theory, okay? So I looked at that and I thought, okay, cool, it may be going for those equal lows. So I need something to confirm my bias, and the way I confirm my bias is through price action, okay? So supply and demand, we have a little trend going up towards, going up, that's therefore heading up towards supply, okay? That's the way I see it, okay? We are looking for a sell, so it is an iron supply. I need a reversal pattern. So we have a little trend going here and we need a breaking structure so it could start going down, okay? And that's what we have here. So we had our high here, a higher high, higher high, and so on. This was our last higher high. And as you can see, price has just broke that structure there, okay? So I expect this now to pull back in here, and my entry should be there to get this continuation of this start of a new trend to push it further down, hopefully heading towards these lows to break those equal lows we saw on the higher time frame. This is how I use all the time frames to my advantage, okay? So I had a look on the higher time frame to see what's going on, switch down to a lower time frame, see if I can see some price action to confirm what I want to happen, which is the reversal. And then if I do that, I get into the trade and then try to drive it down, okay? Or drive it up, depending on the direction. Now, so as I said, it's just broke this candle here. That's why I started this video on the break of this candle. This should now pull back in and then go again. It's already done that, so it can freely go again now if it wants to, or it may pull in again to this zone, okay? So you know my setup, you've seen this a few times, had the trend, it pulls back in, fakes that continue and breaks structure. Why have I entered so early? Now, again, this is what I'm saying about the time frames. Use them. This is your indication. If you go to a lower time frame, M1 here, you could see why. Okay, so we had our trend going up, and then we had the start of a reversal, because in this zone here we start trending down. It goes down, goes up, it goes down. Previous to that, it came down, came up, held, broke structure, and continued with that drive up. But here it came down, came here. When it enters back into this zone here, that's when you expect it to go up, which it did, and it came down. When I saw this pattern, based on what I was seeing on the higher time frame, that was good enough for me. I had entered nice and early here because I wanted to get the move in early so I could get out even quicker. And the reason I want to get out quicker is because in about an hour's time there is news pending. Okay, news due, and it's a major news catalyst. So that could turn this around, drive it all around, drive it up, and keep going up further. I still expect this to get run, but I'm not going to stick around based on news, and also, you know, I don't know when it's going to get run. So that will be my ideal stop loss, my ideal take profit. But what I do, which is something I do often, is take profit when I can. Okay, so I'm looking for a one-to-one, and in this situation, because of my early entry, our one-to-one, I'm risking 10 pips. Our one-to-one is a little bit further down here. Okay, so 742. So let's just move that down to our one-to-one. 742, 742.4. When it gets there, I am closing the majority of my position. Okay, that's my plan. It's run all these stop losses. If anyone from the Asian session was trailing it, it's running all that. After it does that, it could reverse it and go up again, especially with the news coming, or it could just drive all the way down with the news. We don't know what's going to happen with the news. That's 50-50. That's why I don't stick around for it when if I don't need to, kind of thing, because I made the money here. I don't need to stick around for the news. Okay, so as soon as I get to this point, I am taking some money off the table. I don't want to run this video too quick. I just wanted to show you a quick example. This is what I do daily. Look for price action to be my confirmation. I don't use indicators. So this is the price action. This is the big drive up. So think about it. When you get this big drive up, if you're trading with the trend, which most people do, trading with the trend here, because it's the easiest thing to do, and you get this big drive up here, when it comes down here, you're feeling bullish. You are entering here. Okay, you are entering here. You got your stop loss here. At this point, when it's run your stop loss, what you're gonna, or it's about to run your stop loss, what would you do? If you are inexperienced, what would you do? You try and move it down further. You move your stop loss. You pull it there. So I mean, this is plain and simple. I mean, most of us could come to these conclusions ourselves, even if we are inexperienced, right? Now imagine the market makers who've been doing this for years. They know this. They make the market. They know this. They created this. They create this little price action to entice us, to draw us in. They created this big drive. This was based on nothing. There was no news. They created this big drive to entice us in, to get in there, to try and continue the trend. I'm not. It's not that I'm against trading with the trend. I just don't like to get into a trend at the middle or at the end of it. Yeah, I prefer to wait for the reversal of a trend, and I'll get in there because I know where my stop loss needs to be. I can manage my risk clearly. If I got in here, my stop loss is there, I'm out already. But supply and demand tells me I do not buy at highs. Okay, this is a high because this trend started down here. So this is a high. I do not buy at highs. I sell at highs. Okay, so if it's at a high here, I'm looking for a sell, and I'm going to wait for it to reverse so I can sell at the high, and I leave my stop loss here. Okay, so if you switch over to H1, you can see that I got a few of these zones marked up, but you can see here clearly that is the swing high. That is a swing high. That's where your stop loss needs to be. This was the swing high. This was the swing high. If you go to H1, people, try this, backtest this. Go to H1, look for the swing high, switch to M5, and you're going to see something. You're going to see the same pattern that I've been preaching on this channel all the time. You're going to see a little trend going one direction. You're going to see a fake, a drive up, it pulls back in, a fake to continue, and the reversal. That is the start of the reversal. You see it on M1, you see it on M5, and once you see it on M5, you're good to go. It's gone. Okay, so have a look at that. I'm going to take profit here. Just close some of this position now, just so you can see that end the video. Let's take profit, and then I'll leave the runner. I could wait a minute, but what's the difference? It's 2 pips. I'm happy to take something off now, and then let's wait for 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. I'm just going to close it. I'm not fussed about the extra $20 or whatever. I've taken some profit there now. Close some of my position. Show you my trade history to convert that. Close on my position here. I'm going to okay, in terms of moving to break even, when I'm done with the trade, I would like to move to break even, so if price comes against me, I don't lose anything. But for this trade here, I'm not ready to move to break even, okay, because this, I actually expect this to come back here, pull into here and hold here and wait for the news catalyst, okay, and that's why I took the trade, took some profit here. That's why I took some profit here, okay, because I'm not interested in sitting around for it to pull in here, wait maybe an hour or two before it continues going down. I'm taking my money now, and I'll leave a runner to try get to the major swing low, or to my main take profit, okay. This piece I've got lit here, if it does come back and takes me out, it's less than 0. I don't know, it's about $20. I'm not fussed about $20. I'll lose $20 if it comes back and takes me out, so I'm not bothered about that. So you could move to break even, so it doesn't take nothing off, or you could just wait to see if the runner's going to run. If you've got a runner and you want it to go, you may want it to just leave your stop loss as it is. If you move it to break even, it's definitely going to get stopped out, okay. You can reduce it, and put it to the next swing low. Yeah, I could put it there to reduce it, because again, if it comes up here, it should be going through. So I've reduced it. Yeah, we'll reduce it. Okay, so I've taken some profit and I've reduced my stop loss, reduced my risk. I'm going to leave the runner, and that's it. This is what I do daily now. And if you do what I suggested, H1, go back, look at the swing highs and study the price action on M5. You will see how I came across this strategy. This is my own strategy. I've never seen anyone talk about it. It's based on what I've learned from supply and demand, and I just focus and looked at price action, got rid of the indicators, focused and looked at price action, and I was able to see this. So if you do backtest this, well done. You're going to learn a lot from it. And if you do find it useful, hit the like button, hit the subscribe button, support the channel. I keep sharing what I learn as I learn it, okay? All right, this is Patrick signing out. Until next time, peace.